let's talk about some seek and destroy. Let's talk about what we're looking for, what our market looks like during that profile. So typically what we're going to see during seek and destroy is a lot of manipulation, a lot of choppy price action. So what do I mean by that? I mean consolidation, sideways movement in our market, right? A lot of sideways movement, as you can see here on the 5-minute, a lot of chop. Okay, a lot of chop. So what we're looking for is for price to take out buy side and sell side internal liquidity consistently. Okay, so it's ranging. So we're looking for price to be ranging up and down. So if we look at it on a 5-minute, we can see this range. Okay, so we're going to look from, let's pull out this tool here, this date. So let's look from our market open, so 9:30, all the way until about here is kind of when we break out of it. So we're going to look at this, so about like 2:20 p.m. So let's look at this right here. So this was most of our market, market hours, with just the end being that pump that we saw at the end of the day. Okay, but most of our market on Monday the 6th was like this. So seek and destroy. So we initially create this pump here. I'm going to move this a little bit over so we can see these candles. Like that. So we initially see a market open 9:30. We see a pump. Okay, we come up and we create our range. So our initial range is going to be from that market open, so that 9:30 candle down here, to that initial swing high up here. Okay, so now we're looking for our range. So we're looking for internal liquidity levels that are buy side and sell side. So we have buy side up top, we have sell side down below. Okay, so we create that range up here and we create that buy side liquidity right here. I'm just going to use this tool. And we're going to show that right there. So this is our liquidity buy side. So notice how we create this high and then we come down and we create this low. So now we've generated some sell side here. So now we have some sell side liquidity. So the first thing we're looking at, excuse me, is when we come back down is, okay, if we're coming back down, we're creating some kind of swing low. Now we expect price to come back up. It comes to the top of the range. It doesn't go grab the liquidity, but then it comes back down. Okay, now we've grabbed some sell side. And we've also kind of created relative to equal lows. We've grabbed a little bit of liquidity. So after that liquidity grab here, now we're expecting price to come back up to our buy side. Okay, so what happens? We trade back up. We take out our buy side right here. Notice how we don't displace our buy side liquidity, but we come and wick above it. Okay, so after that happens and we close below, now we're expecting price to come back down to this liquidity level again. Notice how we come back down. We sweep our sell side liquidity level. So now this is our range. From this low to this high is that range that we're looking at. So we come back down. Notice how we sweep liquidity and we wick back up. We don't displace. We don't close below the lows. Okay, so that's another liquidity grab. Now we're looking for price to come back up to this range again, to the top of the range. Right here. Okay, so this is where it gets interesting. Because now we've created that new level up here at this high. So now we've created a new liquidity level at this high. So we do end up coming up and sweeping it, and then we don't displace. We come back down. So we would expect price, if we were going to continue our seek and destroy profile, to now come back down again to this low, most likely, right? Down here. But then we saw price ended up pushing for the rest of the day going into power hour. Okay, so going into power hour, it's different. Sometimes at the end of the day, when we have this kind of choppy ranging day, we'll see some kind of pump or dump at the end of the day. Sometimes it's not this aggressive like we see here. This might have been some kind of earnings or something. I don't remember what that was. But this is that seek and destroy. So we have it all on the 5-minute here. So let's break it down to the 1-minute. And I'm going to have to go back and find it again. Okay, but we're going to go back to the 1-minute. We're going to have to find this. Where is it at? We're almost there. Okay, here we go. Okay, so now we're going to go down to the 1-minute, and we're really going to be able to see it on the 1-minute. We're going to see how choppy, look how choppy this is on the 1-minute time frame. It's crazy, right? So this was that market open down here, right, at 9:30. We have a market open pump, and we create the top of our range here. Okay, so now we have this high, we come down and create this low. So this is our range now that we're looking for price to come take out, right? So we see all this choppy stuff here. Even all this stuff on the 1 minute is still seek and destroy, because look at us creating more internal highs. We come up, we sweep that high, we come back down, create more liquidity. Come back up, top of the range, come down, sweep this liquidity, come back up, take out these levels, come all the way back down, take out this range down here. But that's why we're always looking at the 5 and the 15-minute time frame as well, because if we just looked at a 1 minute and we saw us displace the lows, we would want to assume that we were going to continue down to grab our market open, right? But because we look at the 5 minute and the 15-minute, we would have seen that we didn't get any real displacement on those candles. So we use the 5 and the 15-minute as confirmation, and we're able to understand that this is going to head right back up for our sell side liquidity again. Okay, so we come back up. We come back up to this high. We don't sweep our new liquidity level. We come back down, retrace a little bit, and then finally we go pump for that one, and then we come back down. Okay, and then finally at the end of the day, right, we had that pump, but we're not really worried about this part up here. So if you want to trade seek and destroy, you have to be looking at the 5 and the 15-minute time frame as that confirmation to see, are we actually going to displace that high or the low, or are we just going to wick above or below it and end up reversing right back to the other side? So we often see this kind of price action on Mondays. So this is typically when I'm looking for choppy and ranging days, or on Mondays, especially no news Mondays. So we're not going to have a lot of volume in the market. We're not going to have much volatility in the market. We're going to see something like this. So typically you want to look for this on Mondays. I don't love trading this kind of price action personally. It's not my favorite thing to trade because I like to catch expansion moves. I like to catch real big moves with a lot of reward. But you can also still catch really good trades on this. I mean, if we look here, after we swept this liquidity, let's say we just got an entry somewhere around here. We could have kept our low down around VWAP, maybe kept it like 40 ticks, right? Give ourselves some room. And then if we're targeting these highs here, that's 116 ticks, 115. And if we're targeting these highs here, that's still 139 ticks of profit, right? So that's still really solid. That's still really solid there. So you can still catch these trades, right? If we have a big enough range and you really understand how to trade this, you can start looking for these setups in the market on days where we typically don't like to trade, but I will still sometimes trade this kind of profile, this kind of price action, if I really have an understanding that it is seek and destroy. And we keep saying on the 5 and the 15-minute time frame that we keep getting liquidity grabs, I'm going to start looking for it. So we would basically be looking now for us to take out that high, and then we'd look at the 5 minute, make sure we close below, and now we're looking for the shorts all the way back down to these lows, especially because now we have these relatively equal lows here. Okay, so now we're really targeting this liquidity. We have VWAP down here, so we want to come back down, right? So now we would look for those shorts all the way back down, right, which would be another 130 ticks. Okay, so on this kind of day, as long as the range is big enough to be able to still catch really solid reward, you can still trade this. Now, let's say our range is super small and you're only able to get 30, 40 ticks out of your trades. I'm not going to be trading that whatsoever. Okay, so the only time I would really look to trade seek and destroy is if we have a big enough range like this one to where it's worth it to me, and we can still catch 100 ticks plus. We can still catch 2 to 1, 3 to 1 risk to reward on these trades, right? I'm not going to be looking to take seek and destroy if I'm only going to be able to catch 1 to 1 or less, right? I will not do that. But if we do see setups that are around 2 to 1, 3 to 1, 4 to 1, right? That kind of RR, I will be looking to trade this profile. So you're always just looking for the range to be set up. Okay, so we have this range set up here, this high, this low. Okay, so we wait for that initial range to be set, and now we're looking for setups once that first liquidity level is taken. So I wouldn't trade any of this. I would probably wait for this one right here. Once that one's taken, once our 5 and 15-minute close above, now I'm looking to take longs, right? And I would probably take my first TP at this high here, okay? And then I would probably hold to this high and I would get out completely. These are not the kinds of trades that you leave runners on. I would never leave a runner on a seek and destroy profile day. These are the trades where I'm getting out completely with my full position, and I'm not letting any runners go because I'm expecting price to now reverse, which is a cool thing about this because let's say you sell your whole position here, you see us and we don't get displacement. Now you can look for shorts back here to take us down. The really hard thing about this is sometimes you can't find the best entries, right? Sometimes we're not really going to have fair value gaps to enter off of. You have to take that risk, right? If you're going to trade this, the risk you're taking is understanding that we're taking it at the very bottom, right? We're not really using a fair value gap or anything. Sometimes we'll use an order block. Maybe we have an order block down here we can get an entry off of. But for the most part, you're just getting an entry based off of that liquidity sweep. You're not really waiting for, a fair value gap to form. You kind of just have to take that risk to catch it back up. And that's one reason I don't love to trade seek and destroy, but I still will do it, especially on a day like this where we see constant liquidity grabs up and down, just targeting our internal range, right, up and down, and you can still catch some pretty solid moves. But remember, you have to wait for those 5 and 15-minute candles to make sure those are not displacing our highs or lows. Make sure that you really see that it is just grabbing liquidity and it's going to come back down. Okay, so I do sometimes like to trade this kind of stuff. Like I said, if it has enough reward compared to my risk, I will look to trade these, but that's exactly what you're looking for. And typically we're looking for it on Mondays. Sometimes it'll happen on other days if we don't have a lot of news and we don't have a lot of volume in our market. But most of the time we're expecting this on a no news Monday, or maybe if we have like a few yellow folder events, that's kind of what we're expecting. So that's what seek and destroy is, right? We're looking for those entries right after the liquidity sweeps to target the bottom of our range or that new liquidity that we've created. So on this one, there's probably only a few trades I would have taken. Probably taken this one and probably would have taken this one down here, right? And this one here maybe. I probably would have taken this one as well after sweeping the liquidity up here, but obviously we didn't come all the way down to these lows again. So that's basically what I'm looking at. Yeah, I mean 5 and 15-minute charts are important, I think, on every single day. But I love to use the 5 and the 15-minute to make sure we're displacing or we're not displacing our highs and our lows. Because if we just look at the 1 minute, we're going to see that we displaced here on the 1 minute. But if we were looking, remember how we looked at the 5-minute candle, the 5-minute never displaced, right? Neither did the 15-minute. So if we see the 1 minute will fake us out a lot. So we have to be looking at those 5, 15-minute time frames, especially when we're scalping the market, to make sure that those candles are not displacing, or to make sure that they are, grabbing liquidity for that confirmation. So I'm always looking at the 5 and the 15, even on normal days, but Mondays, especially on seek and destroy, you want to be using those time frames to just give you that extra confluence and confirmation. Do you guys have any more questions about this specifically? Any comments? After this, I'll answer some of the questions I see you guys have put out there. But if you don't have any more questions or comments specifically about this seek and destroy, then I'm going to move on and I'll answer some of your other questions. So I'll give you a second. If you want to ask anything, let me know. This is one of those market conditions where you do have to really learn this. You do have to really have this down to be able to trade it, because sometimes you're not going to know where to put your stop losses, right? Because down here, we don't really have a lot of levels to put our stop losses. Up here, we don't have a lot of levels to put our stop losses, right? So you pretty much have to just keep that risk the same for most trades and make sure you're sticking to your plan. You're sticking to that risk management plan, keeping at 50, 40, 36, whatever your risk is. And that's the risk you're taking, because now you don't really have a lot of levels to base your stop loss off of. Okay, so I'm gonna end the video for this, because I'm gonna post this and I want this to be strictly about seek and destroy, and then I'll answer your questions. So I'm gonna stop recording now.